On today's show, 3 questions. Number 1, is this the calm after the storm? Number 2, so who said taking my RAM salary in Bitcoin was dumb again? And number 3, did Trump win because of COVID? Welcome to Dennis Monday's 2 Cents. We have Dennis navigate all the noise. I'm Matt.
I'm Will.
And I'm Rabih.
Yeah, you are. And Rabih, we got to give you extra credit today because you had surgery this week.
Yeah.
I don't know if you call this a minor surgery, medium surgery, major surgery, but had your wisdom teeth taken out 2 days ago.
2 days ago, I got IV sedated. It was the best 5 minutes of sleep I've ever had in a long time. And it was fun. It was really good.
Okay, so you got your wisdom teeth out on Wednesday. I said we had planned around maybe not doing 2 cents this week and doing something different. And you're like, yeah, I'll be fine. And here you are. So you're tougher than all of us is what we've determined. That's the first thing we've learned.
It's fine. Actually, it was more painful than I expected to be. I've had a fair share of like injuries and surgeries throughout my body, and this was more painful than I thought it was.
You're saying like recovery, like the post?
Recovery-wise, it is very painful. I had one of them impacted, and it was very close to the nerve, and I've been icing it for the whole time, and on very strong meds that I've never taken it before. I think the funniest part was that I did the mistake and I watched the surgery on YouTube before I went, and I saw how much bone is being removed. And I went into the doctor's office freaking out. And he just told me, oh yeah, this is business as usual for me. You just won't feel anything. And I really did not feel anything. And it's just like, oh yeah, he is the expert. I should trust him. But I would rather deal with 10 market crashes in a year than one more wisdom teeth removed. Like, it's not my ballpark.
Did you get any good footage of like waking up from sedation? Those are always my favorite videos of like kids after they get their wisdom teeth taken out.
Yeah, my brother stayed there to drive me back home, and I honestly do not remember anything of the 30-minute drive back home. Nothing. I don't remember I was put in a wheelchair. And the funniest part is that my brother said, you were speaking in English the whole time. And I'm talking to you in Arabic, and you're replying in English. And I'm like, okay, that is a good sign.
Yep.
Oh, it's amazing. Will, have you had your wisdom teeth out?
Yeah, I got some good footage from post wisdom teeth removal.
Yeah. So later on, I'll tell you my wisdom teeth story. How did you do IV sedation, Will, or I go under?
Yeah.
Yeah. I decided, because I'm an idiot, to go local only. So I just did local, and she's hammering away in my head. Like it was
just awake watching.
It was like the worst experience of my life.
Yeah.
Anyway, we'll talk about that later. Rabih,
thank you, dentists everywhere.
Thank you, dentists everywhere, for doing amazing work. And I do think it's interesting, Rabih, that you just shared that story of like you'll deal with 10 market crashes rather than like watch that. And then you talk to the surgeon or the dentist, and he's kind of like, this is nothing. This is business as usual. Like it's just such a funny, just a good lesson of like what experience will do for you. So, well, Rabih, good to have you. We're going to limit your talking. You do have to talk a little bit, but we said we'll try to keep it short. Hopefully everyone understands. Let's talk about, is this the calm after the storm?
Yes, because last week was literally the biggest week for the market in a year. And we remember, Matt, we were discussing different sections of the market, different asset classes, different ways they moved. And we're like, there are so many narratives playing out right now. Is it a value versus a growth? Is it a worry about inflation? Is it a worry about the deficit? Is it just hype about Trump? Like, what was it? And we needed, some of the movement to dissipate away to see which narrative withstood them all and what has happened since then. On top of that, we didn't really have much of major political or major economic news lately. Earnings season is still coming through. So far, we have 460 out of the 500 companies in the S&P reported, and 76.3% of them have reported earnings above the analyst estimates, but the average 4 quarters was 79.1. So for the first time, the long-term average is still 66% above analyst estimates. So compared to the long-term average, earnings are still doing really well. But compared to the last 4 quarters, earnings are a little bit lower than above analyst estimates than they were. So just this tells you And it's a good reflection to where the state of the economy is. We got rid of inflation, but the labor market has softened a bit. We're still in a really good position, but you could see like the second order of magnitude slowing it down a little bit. So that was with the market. And then we got some data about CPI inflation. It actually, the headline number, the one that excludes energy and food, actually ticked up from 2.4 in September to 2.6 in October. However, all items less food and energy, which is the more insensitive one that moves slowly, has been unchanged between September and October. And the biggest thing in terms of contributing to inflation so far is still shelter, and it's unchanged at 4.9% since September till now. Those are annualized number. So the stuff that are insensitive, the sticky part of inflation, has moved flat for the last month. There has been a little bit of change of energy and food, which tick the headline inflation up 0.1%, but the market is not really worried about it. And the reason also it's not worried about it is because we got the initial claims. We're getting those every single week. They are how many people are filing for unemployment year over year, week over year, my bad. Week over week, my bad. So I've given you the range before for like the past year. At the lower end, 194,000 would file for unemployment in a single week. And on the upper end, for in the past year, around 261,000 would file to unemployment. The latest figure we've got was 217. So we are actually in the middle, closer to the lower bound in terms of how many people are filing for unemployment, which economically speaking still tells you that we are still on the same track that we were 2 weeks ago before the whole inflation, volatility happened, and we were expecting it. And last point, before I jump into talking about specific asset classes and returns, Jerome Powell had a speech for business leaders in Dallas this week. It's not an official speech. He can't change interest rates, but they doubled down on the questions regarding if the economy is going to be doing good, why cut? Why not? Why do you want to continue cutting interest rates? And he kind of says the Fed does not need to be in a hurry to reduce interest rates. And to quote exactly what he said, we're navigating between the risk that we move too quickly and the risk that we move too slowly. We want to go down the middle and get it just right, that we're providing support for the labor market, but also helping enable inflation come down. So going a little slower, if the data lets us go a little slower, that seems like a smart thing to do. So this is maybe the market is taking it, oh, okay, so the 1% that's happening in 2025 that they have communicated might be distributed across the quarters. It's not going to be all happening in the first quarter and we move on from there. So the magnitude of the cuts is still there. They're not changing it. But when they do it, the pace, how many breaks in between is now up for question. And the market kind of seems to be fine with it, given that the economy is in a good position.
Well, and that makes sense, right? That he'd say we still want, like, we still think this is a sound strategy, but we might slow down the pace in which we do it, which again makes sense to let things kind of play out. As you know, he's always been so very data dependent. The Fed is, and him especially. So that doesn't. I'm sure the market and everyone's kind of like, okay, cool, yeah, we're gonna kind of wait and see what happens. Totally makes sense. Rabih, it's an amazing summary so far. Seeing as how you're drugged up, it's pretty amazing. Will, any thoughts or questions on this for Rabih?
Do you think, Rabih, like they're just in not, I guess, pumping the brakes, but in a way like buying themselves time if something changes? Like they're just saying like we're just going to be careful in a way. Like they're just kind of. It's almost like they're. I don't know if they're just not committed. They're less committal than they have been previously, right?
Because they are the economy is in a good position overall, and they're trying to thread the needle. We moved from the regime where you had an imminent problem, which is rising unemployment or high inflation, and you need to like double down and instill confidence in the market. The market is already receiving its confidence from strong economic data. It does not depend on a policymaker to tell them, hey, we'll fix it. Don't worry, we'll provide you with confidence.
Right.
Okay. So now I think the most interesting part, because we talked about return of different asset classes the day of the election. So between November 4th and November 6th, and how they moved. And we said that Small cap grew the largest, followed by the Dow Jones, and then the S&P, and then the Nasdaq. And then gold took a hit, emerging markets took a hit, developed markets took a hit, but it wasn't too big of a hit. Like in the terms of the range downwards, it was around like 1.7%, 1.8% down. So then I got the numbers from November 6th till today. So it's almost a week and a day, a week and 2 days of performance. And if you look at the performance of all these asset classes since then, nothing is up. So the Dow Jones is down 66 basis points. S&P is down around 100 or 1%. Nasdaq is down 1.7. And then the interesting story is the continuation of the sell-off in developed markets, negative 2.7, gold 3.7, and emerging markets 3.9, on top of small cap going back all the way down to 3.39%. The only thing that was up this whole week was the yield on the 10-year. It went up 0.34%. And if I want to look at the data from November 4th till now, so including the up and down in the market, the S&P up is November 5th. The market is only up. My screen froze.
The market doesn't want to tell you.
It's fine. Okay, so the S&P is up only 1.5%. Nasdaq is only up 0.9%. Dow Jones and mid caps are up 2.5%, and you still have gold down 6%, emerging down 4.5%, developed down 4.3%. So we had multiple narratives. We had, oh my goodness, the U.S. economy stocks themselves are going to do really well. We had a narrative regarding the economy is going to be doing really well, so those are reflected in bonds because people are going to be selling bonds going into equities. We had worries about higher deficit, and this means also higher interest rate. So which one is it? Most of these dissipated. If you look at the movement so far, this is only telling you that we are in a regime for a strong dollar, because gold is down, interest rates are up, so people are getting out of gold to be in interest rates because more confidence in the US government, etc. But it doesn't tell us more than that. We can't extrapolate and say, oh, because we have a strong dollar, it means we're going to have a strong US economy, strong US stocks. And the reason for that is that the stocks for the US kind of lost a big portion of their gains, whereas emerging markets, developed markets, and gold, which their performance depends on the strength of the US dollar, in a sense, stayed down and continued their downward trajectory. So the whole story so far is that we are heading into a direction where we have a stronger dollar. Will that stronger dollar play well in favor of US equities, or will it play well in favor of, I do not know, buying developed and emerging markets cheaply because it's a blip and it's not going to have an impact beyond the economics? It's not going to go deep into the asset classes. We'll have to wait and see. But just the fact that we waited, the volatility dissipated, and there was like a clear trajectory after this whole beehive that happened last week tells us where the market thinks stuff are heading. I mean, stronger US dollar means that I think it's indicating when you're talking about a stronger US dollar, even with interest rates going up, it kind of tells you that they are not worried about a deficit problem, but they are I think the only thing that's properly being priced in right now is a tariff play. Tariffs increase the currency, but tariffs, when you think of tariffs, and we'll get to this in different episodes, it's not a game of checkers, it's a game of chess. So you increase tariffs, it increases your domestic currency, the US dollar will go up, but then you'll have to wait how your people how the adversaries will react, and that will have a bigger impact than just you increasing tariffs. So far a tariff is being priced in. We do not yet know how other economies are going to react to it, and we'll have to wait and see, but that will have an effect on asset classes.
Yeah, you mentioned that last week, I think, a little bit, Rabih, of the tariff. It's too simple just to say, like, what are tariffs going to do? it's who are we putting tariffs against, meaning like what country, what region of the world, and then to your point, how are they responding?
Yes.
And how does the US respond? Like if you're going to tariff certain products from certain countries, do we have the infrastructure? Do we have the, let's say that region or that country decides to react poorly, and then we're forced to kind of like, let's say, start manufacturing that product, whatever that hypothetical product is in the US. It's, do we have the infrastructure? Do we have the manpower to be able to do that? So I like what you said there of like, you can't just say tariffs have this impact. We have no idea until we know more about specifics.
Yeah. All we know that so far they're going to strengthen the dollar. How will they affect equities? We don't know. The market movement this week neglected last week, so they canceled out. How will it affect bonds? Well, the bonds are flat, although interest rates are up. All we know is that emerging, developed, and gold continued going down, and those are affected by a strong dollar. This is all we can get.
Got it.
Other than that, it's complete noise.
Yeah. Well, and you're highlighting here the noise of the post-election craziness, right? Like you said, the storm that lasted a few days, and now we're already back to where we were before, even down a little bit. It's interesting, and we've said before, in the long run, markets don't care about elections; they just don't. And look no further than this: we had this craziness for a few days, and now we're back to normal. Will, you got thoughts on this?
Human nature is funny, and it's just like there was nothing really. I mean, obviously the president is changing, but it shows the effect, the short-term effect that humans can have on the stock market. Because most of the up and down this last week was just because humans are trading stocks, right? And investor sentiment carries some weight short term for sure, and we've seen that obviously in the history of the stock market. Long term, it's not going to play as much of a part, because the long term strategy is dominated by the underlying companies and countries and currencies that make up the stock market. But investor sentiment can move the needle short term. Yeah,
for sure. Rabih, any final thoughts on this at all?
Nope, I'll keep you posted.
Should we let's get Rabih to minimize the talking from here on out. Okay, thank you, Rabih. That was awesome. Number 2, so who said taking a RAM salary in Bitcoin was dumb again? This was a direct quote from our guy. Will, I'll let you kind of take this of where this came from.
This was a tweet, or an X, I think they're called now. An X from Odell Beckham Jr. He is kind of maybe we could say washed up wide receiver.
He's pretty washed up.
Yeah, he was amazing. Had a good career, famous for the one-handed catch on the Giants. But so in 2022, he signed with the Los Angeles Rams, and he decided in some, way, shape, form with his contract that he was going to get paid in Bitcoin. His whole salary was going to get paid in Bitcoin. He had a signing bonus, and then he had, I think a salary. The numbers make up to be about a $500,000 signing bonus, a $750,000 base salary, and a $3 million incentives after winning the Super Bowl with the Rams, which they did. So he ended up making about $4.25 million as a Rams player. That was all, according to his contract, paid to him in Bitcoin. He took a lot of heat. I think initially everyone was like, are you stupid? And shortly thereafter, I think like 3 months after he signed this contract, Bitcoin dropped. He took it at 4 million. It went up to 5 million shortly thereafter, and then it went all the way down to 2 million. His hypothetical salary amount, right? And then it kind of stayed down at 2 million. This is how the Bitcoin has performed over the last 2.5 years, 3 years. Is it was up and then down and then up again, and now it's kind of shot up again. Obviously, post Trump, it's up 30% this month, I guess, is what it's showing. So he tweeted and said he sent out a little dance on the grave tweet and said, "Now, who said it was dumb to take my salary in Bitcoin again?" I just thought it was like a funny little, I don't know, lucky gesture of how the crypto market performs. It in hindsight, it's good, but I bet he was hating himself. And I'd be willing to, I don't know his personal financial situation, but I'd be willing to bet he wasn't super happy about it for, a good amount of time.
Well, and we're also assuming that he still holds this position.
Yeah, he could have sold it all when it was down.
Like, come on, man. Like, I'm gonna guess he is not whole. Maybe, I don't know. I have no idea. But
Hypothetically, it's worth $11 million right now, the $4 million that he took 2 years ago. So it's
yeah,
pretty crazy.
yeah, I think that's an interesting point to show of like if you're able to withstand the it's just like similar to individual stocks or anything in the market, any asset you invest in, if you're able to withstand those drops, and then looking back now, he's kind of showing this kind of like example of recency bias, or I should
Right.
say hindsight bias.
Mm-hmm.
It's like, well, yeah, okay, now you're saying it's dumb, but at the time it probably was dumb.
Yeah.
So I also don't really. This is going to probably be ignorant, and I'll admit that I don't understand this concept of like take the salary in Bitcoin. Like, why don't you just take your salary and then just buy Bitcoin?
Buy Bitcoin.
Like that day. Like, I don't understand this because that was kind of a big thing, right? Where he wasn't the only one.
Cade
Some of
Cunningham, another NFL player. Yeah,
some
they took
NBA
like
guys, I think, did it.
Yep.
And it was like, it made these headlines like, oh, these guys are taking their salary in Bitcoin. It's like, well, couldn't they all just technically just take their salaries and then just buy Bitcoin that day? Like, I guess I just don't understand this concept of like, is there an advantage of quote unquote taking it in Bitcoin? It just doesn't make much sense to me.
I think it was a little bit of a marketing play. And I think Bitcoin, crypto in general, is an asset class that performs more on investor sentiment, like I just kind of alluded to with the stock market. I would say much more on investor sentiment and vibes than anything else, right? Like I think it's, if you know that your favorite athlete is all in on Bitcoin, then there's going to be more demand for Bitcoin because maybe fans of his are going to go buy Bitcoin, and
sure,
economics, supply and demand. If there's more demand, then the price is going to go up.
Yep.
So I in a way, I sort of think, it's a little bit of that whole deal where there's been so many celebrity endorsements of cryptocurrency over the last 3 years, some rug pulls, some problems, some serious like actual legal issues with cryptocurrency and influencers and celebrities and things like that. It's done its thing. Crypto's continued to do its thing, and it's going to continue to do its thing. And, I just think it's interesting because it does get all this hype and it gets all this noise. I have clients coming to me this week saying, hey, I got to get in on this Bitcoin thing. How do I start investing in Bitcoin? And, I don't, it's hard. It's a hard answer because I'm like, well, so what, we're going to invest at $90,000 now, where that's the highest it's ever been, and maybe it will continue to go up. I have no idea. But what do you guys, what do you say to that?
Yeah, that's what's so interesting to me, Will, is majority of people, like, they get on board with something. Bitcoin's a perfect example of like it's all-time highs, right? I think it is all-time high right now.
It is, yeah.
Correct? Mm-hmm. Yeah. So up 30% in a month. It's so interesting to me. And I get it. I get it. Like you see all the news headlines, you see the 30% gain, and your immediate response is like, well, I want to get in on that. But if you really take a step back and say, actually, this might be the worst time to get in on this, like all-time high in a very volatile asset. But it's just funny that people look at that and say, like what you just said, Will, it's like, now you want to buy in? Like, you didn't bring this to me a year ago or 2 years ago when it was down 50% or 80%. So it is an interesting kind of phenomenon around human psychology. Rabih, do you have thoughts on this?
I do. Whenever an asset just has crazy returns, you can think of it, is this due to skill or due to luck? And in this specific situation, one can easily make the argument that it's pure luck, because if you go back to the main argument for crypto and Bitcoin in specific, you have a decentralized ledger that works well when you lose trust in global governments and the currently established monetary system. You would expect economically, following that rhetoric, that crypto and Bitcoin would do well when trust in we'll just talk about the US because mainly the US is the biggest player over here currency-wise. When the US dollar is in a weakening position, or when there is fear about the US government trying to keep inflation under control. And given the fact that all other asset classes, which are much larger in magnitude in volume and transaction than Bitcoin, are showing that the US dollar is strengthening, you would not expect Bitcoin to go up. So the fact that there's this contradiction in the movement between Bitcoin and the economic narrative on which Bitcoin is marketed from tells you that this is more of a noise, is a luck thing, rather than, oh yes, they took an economic side and it's panning out.
That's such a good point, Rabih. And this is exactly why, when it comes to things like Bitcoin, or let's say gold or commodities or whatever, or I would put short-term trading in the stock market in the same category of things happen and then we pretend like we know why. And I think that's what happens with, like, what you just described is exactly what's happening with Bitcoin. Is like, it happens and then people claim that A, they know why, and B, they saw it coming. And it's like, no, you didn't. And this is why people talk, you just said it, Rabih, people talk about Bitcoin being like a hedge against certain things. No, it's not. How is it a hedge against anything? It's not a hedge, and you can't explain it's not correlated to, or sorry, it's not a, like, Will, we were just talking about this in our meeting the other day. There's no proof to show that Bitcoin is like not, or is uncorrelated to the US stock market.
Yeah.
It's not. They move almost in tandem.
Yeah, exactly.
Yeah. So, and that doesn't mean we're saying we're disparaging it as an asset class. It's obviously got staying power, but just saying that these explanations that come after that, then people then pivot and be like, okay, it's not that, but then it's this. It's like, no, let's just call it what it is. Just like gold, it doesn't produce anything. It is purely speculation, and that's how people make money on it. It's the greater fool's theory. You're just hoping to buy it, it goes up, and you can sell it to a greater fool. That's what Bitcoin is. That's what gold is. That's what commodities are. That can still fit in your portfolio. People have still made a ton of money on it, but we would never say it's a long-term strategy of like going all in on it. And I think that's where we get a little bit nervous when people are trying to bring it up of like, should I get in on this? It's like, well, at what level are you talking about?
Right.
At what level, and when do you want to sell it? Because I'm very comfortable telling, if it's an all-time in equity markets and someone tells me, oh, you want to buy equities, when do you want to sell it? I'm very comfortable telling you never. Like, I don't want to sell the equities. I like them. But when I'm asked, like, do you want to buy Bitcoin? I'm like, but when am I selling it? Because if in my mind, I want to sell it next month and just make a quick buck, then everyone is thinking the same. This is how bubbles form. But if I'm thinking I want to hold it for 30, 40 years, then it's a different story. And I would want to know why you're fine holding it for 30, 40 years.
Sure.
So not at what level, but also for how long. If you can answer these questions and be consistent between the two, probably you have something. But in most cases, it's not.
Yeah. Will, any other final thoughts on this?
No, we'll see how it plays out. I think some of it was, like I said, vibes. Trump has made some campaign promises on making U.S. the crypto capital of the world and those kind of things. So I think it was related to the election, of course, right? And that's the reason that it's gone up so significantly. We'll see. It'll be interesting to see. I agree with you.
Department of Government Efficiency is abbreviated as Doge for no reason.
Did we not mention? I thought we mentioned that last time, but yeah, he has
so funny.
Elon and Vivek Ramaswamy running the Doge. Running Doge, which I thought was kind of funny.
It seems, it seems like an episode of Parks and Rec. It really does. Like,
it kind of does.
You know what I mean? Like, you could see, Tom Haverford running Doge or something. You know.
Now look. If this is just a side note. If they actually carry out what they claim they're going to carry out, because I agree with you, Will. It's like, is this a sitcom? Like, this is ridiculous. But if they do carry out what they claim, which Elon is claiming, $2 trillion cuts in the $6 million deficit, I'm like, if you can do that, and by the way, I think they are claiming they have an end date already that this whole program shuts down in 2026.
Yeah, I think it's the 4th of July. It's like the U.S.'s 250th birthday. And
they're claiming that they're going to cut $2 trillion in the deficit by that.
Yeah.
And then it totally like disintegrates. Man, if they can pull that off, good for them. That'd be incredible. I'd like to see that happen. So, okay. Last thing, did Trump win because of COVID? I was actually Rabih's face. What's that face, Rabih?
It caught me off guard because they say he lost to Biden because of COVID.
I know. So that's why. This is why I put the question the way I did. Good. I want to be a little sensationalistic. Okay, so it really, this is kind of like going deep when we're talking about COVID. But the reason I even brought that up is because, and you're right, Rabih. This is the irony of this is the last election, most people claim in the postmortem that Trump lost because of COVID, right? And now, obviously everyone knows the results now. Republicans won not only the presidency at the electoral level, the popular vote, the Senate, and House, which is kind of incredible. We haven't seen a Republican win the popular vote since 2004. So it's been 20 years since a Republican won the popular vote. So obviously there's all this postmortem happening. What do the Democrats do wrong? Like, you can literally every podcast, every article coming out is talking about like what happened, about the specifics in the US. But I thought it was interesting. So the Financial Times actually released an article, and this has come out since, but the Financial Times, I think, were one of the first to get on it, around this not really being about Democrat or Republican. And this is not being about anything to do with just the US. This is about incumbent versus non-incumbent. So they actually released, there is this Parlgov Global Research Project. They do, they basically, for the last 120 years, they track vote share for parties across all 10 major countries. So they track the 10 major countries in the world, and they track vote share, right, for incumbent, non-incumbent, for all these different countries. This is the first time in 120 years that every governing party facing election in a developed country has lost vote share. It's never happened. And we're talking conservative, liberal, that doesn't matter. Who's ever the incumbent across these 10 major developed countries in the world lost vote share. And so they even Japan was an example. They did an election recently in France, in Great Britain, obviously what we just had in America. So the whole point of this, they said, this boils down to basically one thing for the most part. They had two factors, but the main factor was inflation. Global inflation, let's be honest, caused by COVID, or at least that was kind of like the biggest thing that led to this, that we're still kind of dealing with, led to people pointing their finger at the incumbent party and eventually either voting them out or that incumbent party across the world losing massive vote share. I mean, look at the US, look no further than the US of, have you guys seen the maps of showing like the vote share from Democrat to Republican? It's kind of mind blowing how quickly. Now I know there's other factors. We're not going to get political here, but I do think, and I think the proof is there if you look globally, that inflation being the number one factor that kind of changed this election and other elections across the world. I'll leave it there for a moment. Does the question now make sense, Rabih, of why I said that?
Yeah.
What thoughts do you have on this?
Me? Well,
either one.
Go ahead, Rabih.
Honestly, regardless of who is in office, why is it that us humans, maybe this is the medicine talking, but why is it that us humans, whenever we're a little bit inconvenienced, we want to go and make a change? And I'm not thinking only of this in terms of like who the president was. Like when COVID happened during the Trump term, we were like, let's vote him out. And then when inflation showed up, when Biden's term, was like, oh, let's vote him out. And the same behavior happens when the market drops in, 5 to 10%, and you'll start receiving calls from clients like, something different in the market, what should we do? Why is it that we always have this illusion of control that we need to go and tweak something to change the trajectory? This is what I think of, because you could have had the same president regardless who they are over the two terms, and hopefully, assuming that they are being held accountable and they are following the public pressure to do what's good for the country, they are going out there and they're going to be fixing the solutions and dealing with the repercussions at the same time. But it's because we've got that opportunity to tweak stuff. Due to our nature, we're always going to go and try to tweak it. And sometimes it acts in our interest. It's good to be responsive and, get changes done when they are due. But sometimes over tweaking might not be the same thing. Maybe it does not apply as much to elections, but I'm really thinking about this in terms of this US investing, because a lot of time people want to go and change stuff in their portfolio the moment the narrative shifts. But then if they did nothing and this is a buy and hold strategy, they would be better off. So this is where I'm finding a little bit of like an internal conflict. It's like, yes, it's good to have the option to switch, but sometimes we are too impatient or too non-flexible to actually see how it will pan out before we make a decision. We're acting out of a whim.
Yeah, there's so much there, Robbie, I want to respond to, but Will, you want to jump in?
Yeah, I just think it's crazy how like I didn't know this about the other developed countries. That's interesting to hear that it was kind of a theme across the board, not just Harris Trump. COVID really did like change the entire history of the world as we know it, and going forward, it's like altered everything, right? It's just weird to think that it did have such an impact on the future, and some kind of, it seems like a blip in time. Like you think back to it, it seems like a bad dream almost in a way. And so, yeah, I don't have political thoughts on it other than we'll see how there's not a cheap grocery button that Trump can like hit and make all our groceries cheaper. And so, yes, like the incumbent had to shoulder a bunch of the blame for that and didn't really feel like the inflation was getting bad. Everyone was blaming the current incumbent president, aka Harris, on that. And I don't know, it'll be interesting to see how Trump deals with it, because that was, both of them were making campaign promises. Like if you watch any sort of TV show in the last 3 months, then you were getting campaign ads, which I'm so happy are over now at this point. But both of them were either talking crap on each other or talking about how they're going to like fix inflation and bring down the price of everyday goods and things. So it'll be interesting to see what actually happens. We've talked about this on previous episodes. There's no like, we don't want deflation. We don't want prices to actually go down. We want inflation to slow down, hopefully, and continue slowing down. But there's not a like, hey, make gas cheaper button, make groceries cheaper. You just can't like do that. So
yeah, no, I think the answer here is, like you said, well, you can't have that. We need real wages to keep going up and go up at a more rapid pace. Probably,
right.
I think that's how you solve this. So
Yeah.
whether he can do that or not, we'll see. But you're totally right. This is actually an excerpt from this Financial Times article I thought was interesting. It says, ultimately, voters don't distinguish between unpleasant things that their leaders and governments have direct control over and those that are international phenomena resulting from supply side disruptions caused by a global pandemic or the warmongering of an aging autocratic halfway across the world, or autocrat. So it's kind of what you're saying. Like, Robbie, when you were talking, I'm thinking of this, like the psychology of like this illusion of control. Like, I think that's kind of what it is we want to believe we have more control over our lives than we have. And we want to believe that our leader, our president and administration has direct control over all these things, which in some cases they do. But I just think it's more of like the power of narrative, the power of story. They like Biden and Harris were kind of just in a lose-lose, I think, at this point for the most part, because of this narrative and truth. Like, let's be real. It was truth that inflation is up rapidly over the last 4 years. Everyone's feeling it. Everyone's mad about it. And the one thing, like, I think it's one thing to say like, oh yeah, like to understand theoretically the president doesn't have direct impact over that, or there's a lot of different things that have led to this, but it's what do I have control over? I can vote that person out. And that's, I think, what people did. So I just thought it was interesting to see that this is a global phenomenon. This wasn't just in the US. Like everyone's mad at their current leaders. So I thought that was kind of interesting.
Is that like, did we see that coming? Was that article published pre-election or post-election?
No. So this was a post-mortem. This came out November 6th.
Interesting.
So now they had the data and stuff ready to go, because the other elections that they had obviously were from previous, like the year before. So I think they said over is this year. So 10 major countries had elections this year. And every one of them lost vote. The incumbents lost vote share. Never happened in 120 years.
They didn't lose the office necessarily, but they lost vote share. They became less popular.
Correct.
Because we had around like 60 major elections across the world, whether it was like in government, etc. Like we saw Germany flip, right? More towards right wing. We saw Macron in France still win, but lose his government to more the extremists, the right wing and the left wing, because he's more centrist. We had Putin stay in place, but that's a different story. So even in China. So we had a lot of elections happening. It's just the support for the incumbent is what dwindled down. It doesn't mean that the incumbent always lost their seat. That is
correct. That's the distinct. I'm glad you brought that up, Rob, because they say they just lost vote share for the first time on 120 years. So you're right. Not every one of them flipped, but they lost significant vote share, measurable vote share, which they said they've never seen. They've been tracking this data for 120 years, and they've never seen like every major country across the world basically lose vote share, or the incumbent lose vote share, which I think is interesting. So this is probably like literally hours worth of a conversation of like all the different intricacies. I just thought it was interesting to see, could this be boiled down, like all these postmortems, could all this just be boiled down to like the global phenomenon of inflation, and people just hate high prices.
Yeah.
And no matter what it comes, like at the end of the day, and then at the end of the day, it's like, they kind of like, politics aside, they're going to be like, no, I'm going to vote with my wallet. And right now it's hurting my wallet and I want something to change.
Right.
So that's kind of what I think it came down to. Not to did we get too political, guys? Hopefully not. So, okay. Rabih, Will, any other final words? Rabih, not for you. You got to rest. Will, anything else?
Go ice up, Rabih.
Yeah. Rabih wins like MVP.
It's like a player after a game. You got to go ice up.
Go ice up. Well, guys, thanks so much for being here. I can't believe we're coming around that time of year now. We're plugging again the second annual Dennis Money Summit. If you did not go last year, you missed out. You have another chance. It's going to be the same place, Park City, Utah. It's going to be incredible. If you have any thoughts or if any questions on that, or you want to get more details, we have all of our speakers lined up. DennisMoneySummit.com. Please check it out. If you want to talk to us, share your story, get your questions answered, you can go to DennisAdvisors.com, click on the yellow book free consultation button. Rabih, thank you for being here. You're a soldier. Will, thank you for being here. Everyone, thank you for listening. That was our 2 cents. Till next time. Bye-bye.